Our next guest did raise his target last month, and as one of the highest on the street, claims other strategists are involved now in a chase. Joining us today, BMO's Brian Belski has a target of 5,600. Brian, great to see you.
Thanks for having us, Carl.
Do you feel pressure to play along and chase further?
No. And actually, on a short-term basis, we're a little bit worried. On a sentiment basis, we don't begrudge any of these strategists for raising their targets. This is a really, really tough gig. And we think that, many of these strategists have kind of missed the forest through the trees. Number one, they've been focusing more on the index level versus the underlying stocks. Number two, obviously, they've been focusing more on macro variables in terms of their models. And how we explain that is we don't know exactly their process, Carl, but there are models you can take a look at with respect to how we look at the market. We look at a dividend discount model, a cash flow model, a PE model, but then also a macro model. So if you look at the macro model, the macro models are always negative because you're backward looking. And if you take a look at some of the macro data, it's been decelerating. So, of course, those models are going to be behind what's going on in the market. But I think lastly, I'm going to quote Bill Murray from Stripes. We're part of the lost generation. We're amongst the last strategists that kind of look at stocks into industries, into sectors, and how the market. Remember, we run almost $8 billion of real live money portfolios. So we have to put our money where our mouth is. So we talk to clients all the time about how they're investing. And I think strategists have kind of missed that because they want to try to make the big market call. So, again, we don't begrudge them from raising their targets. It's a tough gig, but they're late.
Meantime, you continue to like tech, but you also like financials. Can you walk us through more of the second?
Yeah, we do. I said in my notes, we think very, very thematically. First off, I think the broader theme for financials is scale, number one. But I think the easier way to think about it, Carl, is buy the really big ones and the really small ones. So why is that? Let's start with the really small ones. I think financial services and banking in particular is a relationship business. And there are several very attractive small mid-cap banks with very clean balance sheets, very strong cash flow, and very clean loan portfolios that are really built on strong relationships. Like let's say like Glacier Bancorp out in Montana, or a roll-up of strategies like First Citizens, a great management team that have proven that they can really own a lot of great assets. And then on the other end of the spectrum, the really big ones. What does that mean? Bank of America, Citigroup, JP Morgan, Morgan Stanley, Goldman. Why? They have the balance sheets necessary and the diversified platforms to kind of get through some of these storms. We think the regional banks are still in trouble. We think that their loan portfolios still might be a little messy. And we do think there's going to be massive consolidation within the regionals. But we don't buy stocks because they're getting bought out. We buy stocks because they're fundamentally performing.
Don't you think there's a big AI play here, too, with the big banks?
We do, Sarah. Thank you so much for bringing that up. Nice to hear your voice. We think of AI and financials kind of like we think of clean energy and energy stocks. You just buy the really big banks because the really big banks are the ones that are going to be investing in AI and buying out some of these great companies that have this AI component to it. And I think AI is still coming along. Remember, a lot of the banks, Sarah, as you know, have been really over-reserving, and so they're going to have a lot of extra cash because we're not having a banking crisis in the United States. And with that excess cash share, Sarah, they're probably going to be seeing some increased consolidation, buying back more stock, and paying dividends. So we think the AI play is very strong in financials.